Hello guys, so I want to quickly share using USDcad as a case study what we've been talking on market structure and Fibonacci in our last two videos. So yes, we'll be considering USDcad. This is the monthly time frame, and okay, let's go over to our weekly time frame. So when we talk on market structure, whatever I'm going to be discussing, we can use up whatever I'm going to discuss in the concept on any time frames, or it comes much clearer with the weekly time frame. So take note of that. You could go to any time frame of your choice and use up the concepts I'm going to be teaching on to do your own study and analysis as the case implies. So if we look at USDcad from the weekly time frame, right from the 30th of April 2017, you can see that where the white vertical line is, we had the massive movement to the downside. Price was rallying all the way to the downside, and we could say we were on the downtrend. Yes, from the 30th of April 2017 all through to the 10th of September 2017. So 5 months of massive downward movement, and we could use this up. Come with me and see what I'm about to discuss on this. So here we had this movement all the way to the downside, and price was rallying all the way to the downside. We had this impulsive movement, so we had, let me take this out. So we had this impulsive movement all the way to the downside. Then price did a pullback right here. So this was the most recent swing high at the time. The most recent swing high at the time was this, and you can clearly see we're on a downtrend. So this was the lower low, and this was the most recent lower high. Yes, this was the most recent lower high, and we could see after the pullback, price came back all the way to the downside, creating a new low that is lower than the previous low. And like we said, that is the characteristic of the downtrend. The price will keep making series of lower highs and lower lows, telling us yes, indeed we are on a downtrend. So price here made a new low that is lower than the previous low. Yeah, so we would be expecting after this impulsive move to make the new lower low, we would have been expecting a pullback, a corrective move, and then for price to head much further to the downside. So we would have been expecting a pullback around, we would have been expecting a pullback, and then for price to do what? Move further, much further to the downside, because this is clearly a downtrend. Price has been on a downtrend. But see what happened? Price came up, and then this was our most recent swing low. Guys, come with me. This was our most recent swing low. That is the most recent lower high. And if we would remain on the downtrend, if the downtrend would still be respected, we would expect price to be trading below the most recent swing high rather. So we would have expected price to come and make a pause as long as price does not get to the most recent lower high, and then head back much further to the downside if price was still going to maintain the downtrend. But take note, the most recent lower high here was invalidated. So price came above and closed above the most recent lower high, and this is a confirmation that something else is happening right about here. Yeah, this is a confirmation something else is happening right about here, because the most recent lower high has been violated. Yes, price has taken out the most recent lower high. It came and closed above the most recent lower high, and then this is a kind of heads up that the structure of the market is about to change, or is changing. Yes, it's most likely the market is changing now from a downtrend to an uptrend. And because once you understand the structure of the market, you know when to get out of a trade. So if you had been on this sell trade and then the market comes out and takes out the most recent lower high, it's a sign that the downtrend is most likely changing to an uptrend. But that's not enough reason. It's not enough reason. Okay, we can see price has now made a new high that is higher than the most recent high. So price has made a higher high, and then if we are to confirm this change in trend, we would be expecting price to now make a new low that would be higher than the previous low. And we can see clearly that is what price did here. Price came back and made a new low that is higher than the most recent low. So that is a higher low. Guys, this is market structure for you. So right about this point, we can say for sure that the trend of the market has changed from a downtrend to an uptrend. The market structure has shifted from the downtrend to an uptrend, and now it would be safe to look out for buying opportunities right from this point, because now the market will continue to make series of higher highs and higher lows, and higher highs and higher lows, and higher highs and higher lows, because clearly we are shifting now from a downtrend to an uptrend. So guys, this downward trend was invalidated at the close of the candlestick that took out the most recent lower high. because on a downtrend we're supposed to be seeing market making series of lower highs and lower lows. And then how do we know that this structure has been invalidated? As long as price keeps trading below the most recent lower high, as long as price keeps trading below the most recent lower high, we are still very much in a downtrend. But now we can see this was the most recent lower high, and price came and closed above the most recent lower high. In other words, price came and made a high that is higher than the most recent high, which is a higher high. And then we would be looking for an additional confirmation that yes, the structure of the market has indeed changed, and that would be waiting for price to give us another low that is higher than the most recent low, which is a higher low. So that is how to know when the market structure is shifting from a downtrend to an uptrend, or vice versa. You want to consider the invalidations in the market. You want to consider the invalidations in the market. Yes. So come with me, and then let's look at something that played out here. So we had price made a lower low here, came back, took out the most recent lower high, making a higher low. And then because price has taken off from this point to this point, which means, and there is a close of the candlestick above the most recent lower high, which is a clue, which is the price giving us a clue that the structure of the market is changing from a downtrend to an uptrend. And because we understand that this is now our most recent swing low and our most recent swing high, and because after the impulsive move to the upside, we would be expecting a correction or a retracement, a pullback, price to make a pullback, and then for us to now look out for what? Buying opportunities back to the upside, because the structure of the market has changed from a downtrend to an uptrend. Like I said in our previous video, Fibonacci is a very reliable tool for the job, and you can see we had a swing low here, we had a swing low and a swing high here. So we take our Fibonacci, from the swing low, the most recent swing low, to the most recent swing high. And because we said our Fibonacci gives us better clues when and where the pullback is most likely going to end, we want to consider these areas as the strong reversal areas: the 38.2, the 50.0, 61.8, and the 78.6. And we could see now price pulled back into the 78.6 area, and then all the way back to the upside for a more impulsive move, confirming the change in structure of the market from the downtrend to the uptrend. So if you understood this, firstly, you would be looking out for what? This invalidation. Yes, you would be looking out for this invalidation, and you would have noticed that price has taken out the most recent lower high and made a higher high, that is higher than the most recent high, which is a higher high. And then we would be expecting that, since this is a sign that the structure of the market is most likely changing, I said this is a sign because we need to confirm, and this is not enough reason. This is a sign that the structure of the market is about changing from a downtrend to an uptrend. Because we are getting a higher high now, we would be looking out for what? price to give us a new low that is higher than the previous low. And then our Fibonacci is a very reliable tool for this job to get here. So where is price going to pull back into to present us what? That lower high, that opportunity now to buy the market all the way to the upside. So we can see now, because the structure of the market has now changed, price will now keep making what? Series of higher highs and higher lows. So we have the higher high, we have the higher low, and then there's another high, and then there's a higher low, because this low is higher than the previous low, and this high is higher than the previous high. And then price makes another high that is higher than the previous high, makes a low that is higher than the most recent low, and then we have another high, and then we have a low, a new low that is higher than the most recent low. Now come with me, guys, we can see something playing out here also again. And because we had price make a new higher high and a higher low, sorry guys, and a higher low, this is the most recent low, higher low. For price to still respect the uptrend, we would be expecting price, or we would have expected price to come and now make a high that is higher than what? The most recent higher high. For price to still respect the uptrend, because we would want to see price make series of higher highs and higher lows, we would have expected after the pullback to make the new low that is higher than the most recent low, which is the most recent swing low. Would have expected price to come and make a new high that is higher than the most recent high. But then price did not do that. Price came to this point, and then price stalled, price paused for a while, and then okay, we could see this was the highest point price reached, and then price did what? Came all the way to the downside. So price made a new high, which was not as high as the most recent high. So it's safe to say price made a lower high. Structure of the market is most likely changing. That is a clue. That is a clue that yes, the structure of the market is most likely now changing from an uptrend to a downtrend, because now we are seeing price making a high that is not as high as the most recent high. So price is making a new high that is lower than the most recent high. Price is making a lower high. So this is a clue that the market might be changing from what? From an uptrend to a downtrend. And if for sure we want to confirm that yes, this is really happening, we would want to see price now make a new low, because price has made a lower high. We would want to confirm this change in market structure by seeing price make a new low that is what? Lower than the most recent swing low. And yes, indeed, price gave us that. Price came all the way to the downside, and we can see price, this was the most recent low. We can see price making a low that is, even though this is not too obvious, but we can see price making a low that is lower than the most recent low. Yes, so we could say surely that the structure of the market has changed or shifted from an uptrend to a downtrend, and now we would want to see price do this because we are now having what a, a new high. We are now seeing price making a new high that is lower than the most recent swing high. We are now having price. We can now see price making a new lower high. And because yes, indeed, the structure of the market has now changed from an uptrend to a downtrend, we would now expect price to come and make a new low that is lower than the most recent swing low. So yeah, this is what we would expect price to do, even though at the moment price is consolidating. At the moment, price is consolidating, price is moving back and forth in this zone. Price is consolidating, but eventually we would expect a breakout of this for price to come and now make a new low that is lower than the previous low. And then because the structure of the market has clearly changed from an uptrend to a downtrend, we would see this now keep playing out till eventually again price does invalidate this structure to change to an uptrend, and then we could now start changing our bias from selling opportunities to what? Buying opportunities. So that is what the structure of the market does for you. Understanding what? Market structure. Understanding market structure. It helps you know when and what to look out for. When and what trading opportunities to look out for. When to change your trading bias. That is what market structure does for you. And lastly, let me chip in a thing or two on Fibonacci once again for better clarification on what I discussed about the previous video. So because we can clearly see that we are having an uptrend here, so after every impulsive move we would expect price to give a pullback, to do a pullback. And then how do we know when the pullback is going to end? So we can see price give us an impulsive move. We can see price give us an impulsive movement, swing low, swing high, and then boom, price starts what? Coming to the downside. Okay, so how do I know if this is going to be a pullback, and where is most likely this pullback going to head to? Then I take out my Fibonacci, swing from the most recent swing low to the most recent swing high. I take out my Fibonacci. Then what I then do is wait for price to now come into my strong reversal zones, the 38.2, 50.0, 61.8, and we can now see price came right into the 61.8 strong zone. And then we would have been looking out for what? Confirmation, buy confirmation. Okay, that is a lesson for another day. How do we confirm our entries? That is a lesson for another day. But then this is what we should have at the back of our mind. Also, once again, we could see price made an impulsive move, and then a pullback starts happening. So how do I know this is a pullback for sure? And how do I know when this pullback is most likely going to end? Like I said initially, Fibonacci is the best man for the job. From swing low to swing high, and then I'm waiting for price to do what? Come into my strong zones. We could see price head into the 61.8 zone, and then we can now look for entry. We can now look for entry opportunities to ride what the impulsive movements back again to the upside. So this is how to make use of Fibonacci to look out for trading opportunities in line with your trend. So this is where market structure and Fibonacci comes handy. Your knowledge of market structure and Fibonacci comes handy in giving you trading opportunities. When to stick to a trading bias, when to look out for a trading opportunity, when to change your trading bias. That is the structure of the market for you, and Fibonacci will help you now time your entries, get into the market at the right time. After every retracement moves would be the best time to get into the market. That is the job of Fibonacci for you. Thank you guys. See you in the next video.